Hey everyone, welcome back to the Elite Real Estate Podcast brought to you by Clean Eats Cafes. I'm your host, Sam Popple, and I'm here with Mathias Wilson. He is the CEO of Velocity Investment Partners, and he is getting ready to tell us about, kind of how syndications and stuff works. So tell us kind of, how you would you go to, kind of set up a syndication deal.
Yeah, so basically, syndication is just like a pool of investors pooling all their funds with a single operator who's going to take down a deal that each of them on their own wouldn't be able to get after. So it's kind of you're achieving some economies of scale. Everybody's pooling their funds. We're going after a bigger asset, and then there'll be somebody who's in charge of operating the asset and kind of managing the investment. That would be me, the syndicator.
Perfect. Cool. Yeah. And then is there minimums or let's actually, before we get into that, because I know I almost got you in trouble in the part one as far as asking you a lot about a deal. So let's go into that about how you can advertise or not advertise deal and those legalities, because I admire and respect your integrity of making sure you're following the law to the T, and that way everyone can understand that you're not safeguarding the information. You got a legal obligation, and that way everyone can understand why.
Yeah. So basically, it's private equity is what it is, according to like the SEC, Securities Exchange Commission. So basically, I'm allowed to not file with the SEC using an exemption. It's called the 506 B or C exemption. Basically, is the ones that pertain to the type of syndication that I do. It costs like millions of dollars and years to get. That's like to get a public offering. That's how you make it. Get a public company to be traded on the stock exchange or whatever. So obviously that's not feasible for buying a small apartment complex pooling a couple $1 million. So they give us this carve out, these exemptions, but we have to follow some strict rules. Is for a 506B, which is the one that I pretty much exclusively do. I'm not allowed to advertise openly. I have to have a pre-existing relationship with anybody that I make that offering to. So somebody that I know, that I've discussed financial matters with before I ever present them anything about an offering that I may or may not have. So that's the legalities of it. And the reason they do that is because so the 506C you can advertise for, and that's for accredited investors only. You have to limit it to accredited investors. And for a short answer definition of that, accredited investors are literally millionaires. So my passion in getting into this and continuing this is to connect this type of investment with the lowest level of investor possible. Because I think, everybody talks about Social Security and how there's a problem. It's hard to live on Social Security and we're going to run out of money, all this stuff. I would like to remove that as an issue by helping everybody build wealth and build into that millionaire status. And I think investing in this type of offering is the way to do it. I think that's what got me here. That's what I can do with people, because basically all you're doing is you can leave people being really, really good at their day jobs, and you turn every bit of money that you can loose into the investing world and invest it. And in 10 to 15 years, now you're looking at a serious pile of cash that can change your life, start building some generational wealth, change your family's future. And so that's what I'm really passionate about, connecting people with. So I want to, in order to be able to offer these offerings to people who aren't millionaires, I have to stick to the 506B, which is a lot harder.
Right.
Because I've had investors who've done well over $250,000 in a single deal. And I've done investors who brought $5,000. That was my little brother. I basically forced it to invest because he had $5,000. Mm-hmm. Don't tell the SEC that, but basically it's a lot harder to discuss. Like the millionaires are just more sophisticated. It's and they understand to get there, you have to have been investing in certain things and understand a lot of this, probably a business professional, that kind of thing. So, but if I'm explaining to a blue collar guy who's been saving for 10 years and talking about this type of investment, what it means, I got to do a lot more explaining and education to that guy, which I'm happy to do. I love it. Mm-hmm. That's kind of my purpose now, but it prevents me from just blasting out to the universe whenever I have a sweet deal.
Right. No, and yeah, that's something I've always been kind of fascinated by those rules to a bit because it's like on one hand I understand the government's prerogative of trying to protect people from being scammed, so a sophisticated investor understands that there's no guarantees in an investment, you can lose everything, you know. But at the same time, always kind of part of me hates it because I feel like that there's a large group of people that are now cut out of an opportunity that is now only set to the people that need less opportunity. So
yeah, and that's the thing. It's like, yeah,
it's like the rich get richer is totally true, but it's just not like what everyone thinks. It's just like there's certain opportunity. Like once you get to a certain level, you just have more opportunities that keep coming your way.
Yeah, giving a millionaire a sweet investment I love doing it. It's good. I'm happy to do it. Right. But turning somebody into a millionaire, that's what I'm here to do. That's what what I mean?
That sounds like a great passion. Do you have any desire to create a fund ever, or is that like in the plans?
I do want to.
And maybe just for our listeners, what would the differences between a syndication and a fund be?
Yeah, so a fund is basically it's like a syndication, a longer term syndication with a looser rules on. So syndication is tied to one specific property or portfolio that you're acquiring. It's like a single property deal. A fund can have multiple different properties inside of it, and it gives me a little more leeway as the operator. I can pool the funds, and then I can go after. I can buy something cash. I could buy it with a loan. I could do all sorts of different things. I have a general business plan, and I stick to that. And that's you publish that when you're raising for the fund. So that's cool because a lot of times you don't know until you find a deal. It could be a big deal, it could be a small deal, and you set a minimum for that deal specific to the exact amount you got to raise. Well, my passion is to get these guys started. So theoretically, if I did a deal where the minimum I could set, or a fund where I could set the minimum a lot lower, then I could fill it up with a lot lower level investors. I'm limited to 35, but I could fill it up with that and bring on a bunch of accredited investors, maybe with some bigger checks, a lot of my own money, and we could beef up whatever we could do with that fund. And then I have the freedom to go after big properties, smaller properties, that type of stuff. So that's something that I'd really like to get into. But it's the startup costs for a fund are a little bit more extensive, and the accounting is definitely more expensive than it is for like a syndication. So it's a little bit more expensive to operate in terms of just outright cost.
Gotcha.
We're balancing that. We're working on it. I'm working with my SEC attorneys on what the best way to do it is. We've looked at a bunch of different kind of options.
It probably comes at a certain point where you got a certain level of like deal flow where then the fund model makes more sense. That's my takeaway from kind of what you're saying is because of that just running base costs you got to do every single year to cover the
yes thing. I have to be able to make sure that I can actually deploy their money into stuff and make it start making those returns that I love to bring to people. Right. And if I'm sitting on a $2 million fund with nothing to buy, doesn't do me, them, or anybody any good. It's just expensive. It's an expensive.
And then you got to pay all the costs to report back to everybody. Mm-hmm. So what's the next 12 months look like for you and your partners in real estate?
Yeah, so I'm trying to go after 2 or 3 more properties in the 2025 calendar year. It doesn't necessarily, I don't know, it's just kind of a goal I put to myself. Like last year, 2024 was all about growth and building my brand. And this year, I'm kind of trying to focus on building the portfolio. One, I think the market this is the time to buy. I think we've brought a lot of supply into the multifamily markets over the past 2-3 years, but there's a black hole behind it. So like 2024 was the year that brought more supply than ever before into the multifamily market across the country. But because the interest rates started shooting up in 2022, everybody stopped construction. So now that all those, everything that started prior to 2022 is finishing up now and hitting the market, and then there's nothing behind it. So it's everything is settled price wise, rent wise is settled because of all that new supply. Mm-hmm. But I think the rent growth and and demand for multifamily housing is just going to continue. It's absorbing all of that now, and it's going to start going, shooting back up for the next 2-3 years. And I think now's it, while the prices are still soft from all the supply, it's time to buy. So I do think 2025 is a good year to buy. So I'm trying to do that. And I'm also trying to deploy a total of, or raise to deploy a total of $6 million. So kind of doubling what I've done in the past.
Wow.
That's my goal for this year. And I'm, I think we're capable of it. I've spent a lot of time, with all my social media, the LinkedIn, the newsletter, going on podcasts, all that. Right. So ambitious, but I'm looking forward to seeing what we can do.
Yeah. So we were talking a little bit. I know you have one property already in Mississippi and one you're kind of looking at. Tell me about those like pockets in Mississippi that you kind of are seeing that it seems like a lot of people overlook. I mean, I hate to I don't want to put your spots on blast or anything, but I think finding niche markets and traditionally areas people shy away from is a very interesting thing. And I've always looked at a state like Mississippi as if you look at it across most of it, a lot of it's kind of depreciating because it's a very rural state. It's like it's probably one of the most rural states in the South, actually. And there's a lot of rural areas, but that state is the least. And you see, if you just go look at it, there's a lot of 2% rural properties where you can really cash flow 24% a year or more. So it's like credible cash flow, but it's like when you go look at what it sold for and 2006 and what it's listed for now, it's very
20,000 more. Yeah.
Yeah. Very small difference.
Yeah. So, good question. So I like to, I'm a Warren Buffett fan. So he's always like, be greedy when everybody's fearful and be fearful when everybody's greedy. Find a niche, and go hard there. Diversify. He tells everybody, don't diversify. Go with what you know and go do that well. But really, I started looking, brokers years ago. Brokers were bringing me properties all across the Southeast, and I started looking in, and I started underwriting like Hattiesburg market, and there's no new supply in Hattiesburg in terms of multifamily. There's huge job growth, population growth, and they're very business friendly. They're bringing stuff in. They're building infrastructure, and so I'm like that. This looks really good. Why is nobody else, investing here? But basically what it is like, if you look at Mississippi, you're seeing population decline overall in Mississippi. So you're like, okay, we can clearly not invest there. How's that going to work? But in reality, there's like 2 or 3 markets in Mississippi that are really doing well above the national average in terms of job growth, population growth. It's basically all those rural areas are collapsing to a few spots. Hattiesburg being one, the Ocean Springs, Biloxi, area is another one. But basically, I'm fine with not fighting all the big institutional money for the multifamily properties there. It's a smaller market, so you're not going to get the primo Class A loan quotes from Fannie Mae that you would in like downtown Dallas. Mm-hmm. But I'm fine with that. I don't have any problem doing that. I'd rather be able to find deals that work with less competition and not have to deal with bidding wars and things like that. So I've never won a bidding war. That's just never happened. So that should tell you everything I've bought is basically off market and at a discount from whatever it was listed, for whatever reason. So, or it wasn't even, it wasn't listed at all. But I also think, I was going to make another point, but it's totally gone now. So continue.
No. I mean, I think that's very good insight because so many people are just looking at where it's hot. And I think we're all fighting over the same stuff. I've been in a couple real estate clubs that have multiple syndication groups in them, and Dallas is always hot. There's usually like 2 or 3 teams always like kind of in the running for the same Dallas properties. And then, it's like down in South Florida and everything's, hot in Miami and stuff. But and so I really admire you finding that niche and then actually breaking down the data beyond what the overall state is and what those pockets are, because I've actually even noticed it. A lot of people are putting data out there that, there's, people leaving Florida and all that, which that might be happening. There might be some problems with home sales like in Jacksonville or something right now. But over here in the Panhandle, we're in a totally different area. Like, I mean, if you build a new house, it's selling, like it, the new houses aren't sitting on the market. So, so I definitely think that's great advice. Even though we're talking about Mississippi, just even if you use the whole map, niching your data down to cities within a state and not just taking the whole state as the letter of the law, because I mean, you can definitely miss out on some great deals. And it sounds like you found those, 2-3 niche cities inside of a state that probably most people would just completely overlook.
Something else I would add, basically, is that my strategy, I don't like depending on things that I can't control in terms of as an investing strategy.
Right.
Like appreciation to me is always an extra. So, the appreciation, the rent growth, you can kind of predict rent growth because you can just look at the numbers and there's no way you can avoid it. So you underwrite some rent growth, but I don't underwrite cap rates getting a lot better, cap rates compressing. They can be, a better valuation on exit. But I just stick to a value add strategy. I find a property, there's something wrong with it. It's not operating it's a mom and pop job, that not professional management or deferred maintenance, things like that. So I stick to appreciation that I can force, that I can make happen by improving the net operating income of a property or a portfolio or whatever. And then I know I'm going to have a higher valuation regardless of what the market does. And so I don't underwrite appreciation into my deals. Usually they will, because I focus on, like, I find those strong growth markets, because at the very least they're not gonna crash, right? So if there's projecting strong population job growth for the next 5-10 years, I'm not gonna lose my shirt on a deal. More than likely it'll keep and it'll appreciate, but that's kind of I'm hedging my bets in a way.
That is great advice, because appreciation just be looked at icing on the cake. It shouldn't count it as the cake. And everyone who was buying in 06 and 07 got a clear call on that when all of a sudden the appreciation stopped happening. So you really can't count on it. It's like something where over a 20-year period, it's indisputable that you'll see it. but like, are you going to be able to cash in on the year you need to sell?
Exactly.
That's
exactly. That's why there's a lot of syndicators who got bit by buying in 2021, 22, thinking, hey, we're just going to keep going with this at the rates we have, and then the interest rates shot up. Nobody could pay those prices anymore.
Then it compounding with the rates shooting up, then the insurance went up, too. So between the interest rates and the insurance rates, especially in states like Florida and Texas, we just got smoked. I mean, I know for one of my restaurant buildings, I have a triple net lease. My insurance went from originally it was at like $7,500 around 2020. Then I think it went to $12,500. Then at 2024 it was 20,000 something, and then this year it's like 21,600. And I mean, again, I got killed. I got like an extra 2,500 in my monthly restaurant expenses that I did not see me having like a couple of years ago. These are just kind of things that you can't always plan for, but you got to underwrite some cushion in there, because unforeseeable just go up.
Yeah. So if you're counting on appreciation to be able to pay for any future, you better have some cash flow to cover any future unforeseen, because it's going to happen, right? Nothing ever goes exactly according to plan. But if you're counting on appreciation to fix whatever comes up, that is a bad plan.
Exactly. No, I couldn't agree more. So what's the lifetime goal for Mathias Wilson and his family? What are you trying to accomplish here before you leave Earth and retire with your family? What are you trying to get done?
Okay, that's a good question. Big question. So one, family wise, I have two little boys, 6-year-old and 3-year-old. I want to raise them with more of an entrepreneurial mind, less of a W-2, go work at a job, sit at a desk, work for the man. I'd rather teach them, hey man, find something that's lacking in any market. It doesn't have to be tangentially related to real estate. I don't really care what it is, but I want them to have the mindset is like providing value to a marketplace. That's how you make money, right? So go find something, fix it. And it could even be nonprofit. It could be, go work on however you want to do it, but be curious about how to fix things. So I'm trying to raise my kids to think like that. That's number one. Number two, we like to travel. We do cruises a lot. Like, I'd like to be. I never got to. we were very restricted from just what we could afford to do when I was a kid. 6 kids. Mom didn't work and dad was enlisted. So it was. We didn't do a lot of cruising when I was a kid. I was like 33 years old when I went on my first cruise. So. But I'd like to just I love providing the opportunities and seeing the kids light up. And my 3-year-old's like, every time we get back from a cruise ship, we leave home to head to daycare. He's like, "We going on a cruise today, Dad?" And I'm like, no. I was like, he's just excited, It's like, no, we're not, but we'll do it again soon. Being able to provide that for the kids is awesome. I'd like to be able to travel more frequently and go see my family in Kansas City more frequently. And show the kids a bit of the world while they're, while I can still go with them and things like that. So those are kind of family goals. Business goals, I just want to create as many millionaires as I can through this type of investing. That's really what I want. I want to give people the first investment often is what it takes. The first successful investment is what it takes to show somebody what's possible. And I don't care if they make it with me, but if you scrimp and save, make $10,000, $15,000, $20,000 and put it into a syndication, 5 years later, it's, you've got only a couple thousand left in the deal. It's been paying you thousands of dollars per year, plus, the equity, and it's worth, $40,000, $50,000 now. Like you show them that that's possible. And I think that they're off to the races. It doesn't have to be with me. I want to show people what's possible to do. Once I learned that was possible, I was crazy. We invested every cent my wife ever made as a real estate agent, and every penny I made above like a first lieutenant salary, we just threw it all into real estate, and everything we made from all the real estate, we never touched a cent until I got out of the military. Everything was just immediately reinvested. So like I said, it was over $1 million of invested Wilson personal money that was invested in the syndication.
Everybody needs to back that up and listen to what he just said, because that is incredible advice right there. I don't even know if he was even intending to give that as advice, but I want to make sure that does not go miss, because I would love to have a spouse that would be on my team and where we were dedicated like that, because that is that's a wealth hack right there. I mean, you guys were able to live off your main base salary, invest everything your wife made. So everything your wife made was sent straight to compounding. And then everything you made over a certain amount was sent to compounding. And how many years did you guys do that? I mean, for our listeners.
Since we got married, we did it every year. I graduated college $80,000 in debt with nothing to my name and a car loan. Once I got stationed down here, we paid off the car loan, we paid off the student debt, and we started buying. We bought that first house in that same year. We knew that. Well, she's very frugal. I'm blessed to have a wife who agrees and is on board for this. I'm more aggressive now than she was, because she had to talk me into buying that first house. But I'm much more aggressive now. But I mean, we did that. So that was 2012 when we got married. So we bought that first house in 2015. So it's been 10 years.
I mean, everybody listening to your show, if you're a couple and you guys are willing to get on the same page, I mean, that is a hack to accelerate your success together. Like I said, I'm envious. I'm envious that you'd met someone that so perfect, because like I said, that's just a tremendous hack for anybody listening. And if you're a couple that's married that can get on the same page and you guys can live on one salary and invest in another, I promise you, I mean, the amount of money you'll multiply in a decade will more than likely be over $1 million as it was for Mathias.
Yeah, I mean, I would add on too, is more so than just the ability to delay the gratification just a little bit. Just what, hey, I want to be able to do these things. Believe me, I wanted that boat. I wanted all these things, but I wanted to be able to buy things with what my investments paid me, not with my salary, if that makes sense.
Right.
So, I mean, we hit a net worth of 5 million last year in 2024. And it was like kind of a, wow, how does this even happen? Like, it just accelerates and accelerates and accelerates because you just keep reinvesting. And like now I can go on cruises all the time with my family, and I don't work other than the company. So.
Right. Yeah, no, I mean, like I said, I think that's incredible. And, definitely something, like I said, it's, easier to do when you do have a spouse who wants to be a partner, and, you guys are on the same page. But yeah, that is, like I said, that's great advice on way to get ahead. And I mean, I definitely see how it compounded. So I always love asking this question. This is how I build up my reading list. What's your favorite book or 3 favorite books that kind of helps you get to where you are today that you attribute to your success?
Okay, so I think there's kind of 3 categories. There's one that you need to change your mind. So the Rich Dad Poor Dad is the one I always say, because it forces you to change your mindset because you always just go, hey, if I make more money at my job, I'm going to be rich and wealthy and happy. But that is not it. It doesn't matter. There's millionaires who never made $100,000.
Right.
You need to change. You need to put your money in assets that pay you.
Right.
And then turns out those don't change. They just keep paying you more and more. So that the mindset change is important, because otherwise you're in the rat race, right? You're trying to make more and more, but you're spending everything to do all these cool things that you want. What you need to do is be making as much as you can at whatever you're good at or whatever you enjoy, and then using that as a catapult to start buying assets, in my opinion. And that book is probably the best at that. The rest, I'd say, like I read a lot of books like Wheelbarrow Profits by the Multifamily guys, and David Lindahl. David Lindahl's a bunch of books on those on the same stuff. I read a bunch of those, and those kind of got me there. And then I think the last ones are all just discipline. Like the Jocko Willink's book. I really like that one. There's some other ones that I'm trying to read right now that I haven't had time. I've been driving all over Mississippi. But books like that, I think might get the mindset book, and then how-to books, as well as the kind of work on inside you on yourself kind of books. I think that those are what I recommend. So I won't give like 3 specific books, but I'll just say those I think are the 3 focuses that you should have.
Yeah, no, totally agree. You got to have the right mindset before you can figure out the how-to. So definitely agree with that. What's some advice you'd give to someone who's starting out today, who hasn't invested yet, but they want to invest? What would you tell them to do so they can hopefully get to the level you're on now?
Yeah. So well, first of all, I just put together and launched out for free Beginner's Guide to Real Estate Investing. How can
people go?
Yeah. I got links all over my website and my newsletter, capitalvelocityinvestments.com.
Cool.
The Get Invested podcast, and Mathias Talks Investing is my Substack name. So it's all links over there, or you can just DM me on LinkedIn or send me an email or whatever. So through my website and all that. So plenty of ways to get it. But basically, I always tell people, is like, I don't know if I was doing it again. I don't know that I would have started doing what I did. I would have started throwing cash into knowing what I know now. I would have started finding somebody that I can trust and leveraging their experience, getting a mentor, learning from people who are doing what it is that you want to do. I kind of did it on my own. I mean, I was listening to podcasts and stuff, but I never made a personal connection. I was in the military and deploying a lot. So it was hard for me to like commit to going to a coaching or going to a something or other, because the job I had, I could disappear immediately, for months at a time. So it's hard for me to spend a lot of money to do that. But if somebody who's in a different situation, I would recommend, it's worth a few $1,000s to go learn from somebody. But I would say follow people for a while and make sure you trust them before you do that. Because there's plenty of coaches out there that all they are is coach, right?
Right.
Like, do you ever do any of it, or I would check on that. Yeah. So that's what I would do. But I would say we all have, like, our phones. We can learn everything from YouTube and and Google and answering all these questions about investing, I'd say, it's all there. The knowledge is there. Knowledge is what it takes to be good at stuff. So if you're willing to take the time, and I always tell people, it's like everybody wants to start but when they don't have money, it's like you either got to bring skills or money to get started in this, pretty much, right? Or a network. Mm-hmm. It's like so. I'd always tell people, it's like you got to prove that you're willing to learn and you're willing to start saving money to use that discipline that we talked about. Because I tell a lot of people that want to come learn from me and work with me, and I'm like, prove to me that you're, it gets really quiet after a while. That people get all gung ho, but I say, prove to me that you're willing to put in the work to do this by learning and by starting to save. Mm-hmm. And they just disappear. It's hard to do. It's not easy, but I would say, like, hey man, if you're good at saving money, if you're disciplining yourself to save some money, find somebody who you trust. Learn, anybody that I know like me that's a decent at this job is happy to talk about it, happy to share, happy to give advice on any particular deal you're working on at any given time. I just say that's the best way to get started, is to kind of latch on to one or two people like me that they're doing what you want to do, and just keep asking their advice, and eventually prove to them that you're gonna follow that advice, I guess.
Yeah, no, I think that makes sense, because I know I've had a lot of people reach out and say, hey Sam, I want you to be my mentor, and I'll tell them a couple of things, and then they disappear, and I'm like, if I'm gonna be your mentor, you don't want me to charge you money, then you gotta be like,
at least show me that it's making an impact, because I'd love to make an impact in people's lives. But if you're just running to me every now and then with you get excited about something and then it goes away, and I never hear the results or that you're seeing any progress in what I'm recommending, I was like, I'm sorry, but I'm a busy guy. I can't just. I'm happy to help, but you gotta do your part.
Exactly. No, yeah. There's definitely a lot of people that will come and ask for help, but they don't really want help. They want you to do the whole thing for them.
It's like, man, I'm sorry, but that world doesn't exist.
So, but man, this was a great. I definitely enjoyed connecting with you and getting to know you. I'm definitely going to want to stay in tune on some of your deals. So. Definitely add me to your list, and when you can release information on some of those, because I'm definitely interested in getting involved. Again, I know I asked you already, but where's a great place for people to reach out to you and go check you out? Where can they listen to your podcast?
Yeah, so it's hosted on Substack, but you can find it on YouTube, on Spotify, anywhere you have podcasts. It's the Get Invested podcast. It's basically my best friend, who is a academic type, was a PhD English student, English major guy. It's basically him asking me questions about real estate investing. So it's kind of we bring like, hey, the repertoire of two guys who've known each other since the cradle, and he tries to ask questions that he thinks most of the beginner investors would want to ask, and so and then I try to answer them to the layman terms as much as I can. But that's a Get Invested podcast. But then LinkedIn, Mathias Wilson is my name. I put a bunch of airplane pictures and videos and stuff up there all the time. So that's me. And then my Mathias Talks Investing on Substack. You can find me there too. Everything's free. There's no, I don't do any premium, any newsletter or anything like that. I don't have time to do that, to be honest with you.
Cool.
And then my website's capitalvelocityinvestments.com, and they all have links to each other. So you can if you find one, you can find the rest.
Perfect. Guys, I definitely recommend you follow and connect with Mathias. Again, he can't be advertising those deals, but if you're connected in this circle, following along, he can then talk with you about those if you approach him and you guys create a relationship. So definitely recommend, like I said, you reach out, because these are definitely great deals that he's putting together for people that he's close to. So definitely recommend everybody checking it out, checking out his podcast. Appreciate you so much for coming on the show. Everybody who wants to listen to more episodes, check us out at theeliterealestatepodcast.com. please come and see us in one of the Clean Eats cafes. I own all the Clean Eats cafes that in the Northwest Florida Panhandle, as well as Mobile, Alabama. So we definitely appreciate your support. Coming and see us at Clean Eats. We're a healthy cafe and meal prep company. Check us out, theeliterealestatepodcast.com. And we can't wait to see you guys on the next episode. So thank you guys for tuning in. We'll see y'all next week.
Thanks, man.